Hello everyone and welcome back to the channel. This should be a short one, but today I want to talk to you about what Jerome Powell said today, why the Federal Reserve increased the rates by 0.75%, and finally, why I think unemployment is going to increase because of these rate increases. So let's get into it. First things first, what did Jerome Powell say? Well, he talked about why they increased rates, where is he expecting them to be in the future, and what the reasons were. So he raised them 0.75%, and he said that it's because he's expecting inflation not to subside, and he also saw the jobs numbers, and they've been great. Depends on how you look at it, but they really have been good. So he said that because of the robust economy that we're still showing and supply and demand really aren't in line, they decided that they were going to increase rates 0.75%. I heard a reporter ask if this was going to continue depending on how inflation looked and what rates were, and continue to see what unemployment was. Well, he replied and said they are not sure how much they're going to increase rates. They are not going to stop increasing rates anytime soon, but he's not promising a 0.75 increase again in the December meeting. Next, he talked about how core inflation numbers are between 4 and 5%, and the reporter asked, once we get above that number, is that where we're going to start to see transparency and where we're going to see inflation really start to go down? Well, he said we might not have to get to that point because inflation really is going to be beat by what interest rates people are seeing in their everyday lives. That includes banks, because they're going to be giving out these loans for mortgages, for cars, for personal consumer debt, all of those things. Inflation's going to be hit by those numbers. So for example, we saw today in the news that cars are going up to 7.5% on their interest. Houses, 7% and higher for mortgages. All of these different things. That's where inflation's really going to start to get beat by these high interest rates. The federal funds rate doesn't necessarily have to be higher than what core inflation is in order to really subside inflation. At least that's what we heard from Jerome Powell today. So I touched on what's going to happen in December, and I just want to say a little bit more on it. I just don't think they're going to stop increasing these rates unless we see some crazy different numbers than what we've been seeing. We have CPI that's been continuing to come out, and it's been 8% or above. We'll see what it comes out with, but the Fed really pays attention to core numbers, and if that's still around 4.5%, I'm expecting them to do another 0.75 increase. Now, what we did hear from Jerome today is that we're going to continue to have these high federal funds rates until the foreseeable future. He doesn't know when they're going to stop and when they're going to bring rates down. He did say something important. He thinks that getting on top of inflation, getting it stopped is really important, and that they have more power to bring the rates down and to use their monetary policies to help everyday Americans if they go too far. He thinks that they can help them way better than if they just let this inflation go crazy. And that's because of the tools they have. They have tools on printing money and lowering interest rates. That's something that can really get businesses and individuals to spend more money. And that's where he thinks he can help people. So we'll see if that's really true later this year. Finally, I don't know what unemployment is going to do. Could go up, it could go down. But right now, unemployment's going down. 50-year mark of just great numbers. But we're seeing people prepare for this different cycle. Microsoft laid off 1,000 people. Other companies are getting ready to lay off people. Anyone that's on a PIP, you should be worried you're going to get laid off. But I just don't know if it's actually going to be as strong of a downturn as people are anticipating. We'll see what happens, and we'll see what the numbers show. One thing we're seeing from the current numbers, though, is that we're not really seeing a discrepancy in the amount of jobs that are available and the amount of people that are willing to change their jobs. Those numbers are still crazy high. People are moving to new jobs, record number. People are increasing their wages very well. That is for middle and high income earners. Lower income earners are not doing as well, which the Fed cares about a lot. So we'll see what they do about that. But this supply and demand of people that are willing to work for an increased rate is really off the charts still. So we'll see what happens with that as they increase these rates and people start to get laid off. We'll see if it really makes a difference. Make sure you leave a comment below what you guys think is going to happen with this inflation, and what do you think we're going to get in a recession in 2023? Maybe we'll even see it in 2022. Who knows? Anyways, that's all I have for you guys today. So make sure you like, subscribe, and I'll catch you in the next one.